Hello. Welcome to In 180 Seconds. Today, let us understand what is meant by a stock. In the world of markets, it is synonymous to use the word stock, share or equity. So let us see how is a stock created, owned and traded. Suppose, for example, a person named David has a fantastic idea for doing business and wants to start a company. He needed a total of 10 lakh rupees to start the company. Since David did not have the full capital required to start the company, he drafts a business plan and explains this to his friends. Now let's say 9 other friends show interest and tells David that they would like to be partners in the company. So David asks each of his 9 friends to put rupees 1 lakh as initial investment to start the company, including him. So the total 10 lakh rupees is now on the table required to start the company. The 10 members own a part of the company. This ownership is given in the form of shares of the company. The 10 partners decide a face value for the share of the company. Let's assume they agree to have the face value of each share of the company to be 10 rupees. Since each person invested 1 lakh rupees, they all get 10,000 shares each. Alright. These shares are privately held. What I mean by this is, the company shares are not available for the general public to get ownership in the company yet. Let's assume, the company that David and his friends started has grown big and they now decide to increase its reach and scale. They might want 100 times more capital than what they started the company. So they decide to go out ask the public. And how do they do this? By doing something called as IPO, which stands for Initial Public Offering. David's company comes up with this initial public offering through which it asks the public for money, in return to allocate them shares of the company. Since David's company needed close to rupees 10 crores to expand its business, they decide to offer the shares through the IPO at rupees 100 per share for the general public to purchase. So how many shares are they trying to sell now? 10 crores divided by the share price of 100, which comes to 10 lakh shares. On evaluating the business and financials of David's company, the general public might be willing to purchase the shares through IPO, paying rupees 100 per share, thereby getting a piece of ownership in David's company. The company receives the 10 crores amount and then plans for executing its ideas to expand the business. Then the stock is listed in the NSE and BSE market exchanges for the people to sell or buy these shares. So, the people who own the stock can sell it to someone else in the market who is interested in buying it. However, the company as it progresses with the money it received, can show the growth and thereby increasing the demand for its stock, which would in turn increase the price of their shares. I hope this gave a brief understanding of what stock means and how it is owned and traded. Thanks for watching. Goodbye.